Awesome. Cool. And looks like we got, all right. Cool. We have some of our board showing up. We have Pete Upton, our board chair, and Cindy Logston calling in from Oklahoma. Awesome. Cool. So usually folks get automatically are automatically admitted into the room, but it's a little slower this time. But yeah. Awesome.
See where they're trying.
Babbie and Pam. Awesome. Cool. All right. Awesome. Cool. Well, let's get started. Welcome everyone. It's great to see everybody and Happy New Year. Really, I'm excited to start the year and continue the work we're doing for Native CDFIs. And I want to say thanks to all our members for the great work you're doing for your communities. Today, we've got a lot to talk about. I think we have two sections. First, it'd be good to go over some of the latest updates with what's going on with federal funds available to Native CDFIs, or that will be, and hopefully should be available to Native CDFIs. And then after that, I want to talk a bit with some of our guests. Today we'll be joined by Pam Porter and Babbie Jacobs of the Social Venture Circle. And they've done a little bit of work, background work and surveys around investment in individual CDFIs. And as we move forward and we look at all different avenues of support for CDFIs and new ones, we thought that this would be interesting to have this discussion, learn a little more, and see if there are any good models out there for folks to look at. So, and that brings us back to our purpose. We're here to share information, make sure it's timely. As everyone is isolated for COVID, the Native CDFIs are doing incredible work across 27 different states, and this information hopefully should be relevant to everybody. And we want to learn from each other and provide this space to connect. So we think that Native CDFIs are a unique group, and there aren't other folks doing the same things you are doing. So thank you. And with that, I want to see if anybody from our board wants to have any opening remarks, say Pete or Cindy.
Jackson, I just thank you again for bringing the diversity of the topics that you bring weekly to the group, and especially with the COVID funds that'll become available to the Native CDFIs. You know, having a strong, united voice moving forward, and just making sure that Treasury and those that are making the decisions are hearing our voice. So I want to thank you for that.
Cool. Cindy, you want to say anything? Cindy's our treasurer. Or Fern?
No, I was just going to say, echo what Pete says. I appreciate the close watch that you have on Jackson.
Cool. Great. Well, thank you. Cool. Well, with that said, let's get moving forward. So again, here's our agenda. Oh, one thing we didn't talk briefly about the PPP, and then get into our guests, learn a bit more about what they're doing and what they're seeing around individual investing in CDFIs, and hopefully that's of use to our members. And then just a final reminder that next week we are going to be joined by the Federal Reserve, and they are we'll be holding a joint listening session with OISTA Corporation with the Federal Reserve next week. Same bat time, same bat channel. I'm looking forward to that. So we'll talk a bit about the CRA and what we've learned, and really what we want to convey there. Cool. So here is a text-filled slide with some information I think that is really most relevant and needs to be shared immediately. So this, as everybody knows, the coronavirus relief bill that passed at the end of 2020 included $3 billion that was set to go to the CDFI fund. And NCN has been keen to make sure and advocate that native CDFIs get a fair portion of that $3 billion. So that's to put that in perspective, the year before, the CDFI fund got a little more than $260 million for 1 year for the entire year. So going from 260 to 3 billion is a significant increase. And that should be something that native CDFIs and all CDFIs should applaud Congress for, and really investing in CDFIs. I think it was a tremendous effort by a lot of our members and our partners to get to that point. And now that we're at this point, we need to make sure that we are not left behind as other folks are fighting for the funds. So this 3 billion is broken down into two large chunks. One is 1.25 billion, what they're calling a rapid relief program. And if you are on the CDFI funds email list, you heard a bit about it this week, and you're going to hear more about it hopefully next week. And the other half, almost half of this 3.75 billion is 1.75, which is going to be a little more long-term, but also a little more targeted to minority CDFIs. So that's the quick overview. The bill included at least $25 million of this 1.25 billion for CDFIs. And when the bill came out, we were, I guess we were understandably disappointed, I think, in how low that figure was, even though it's more than the annual NACA figure of 16 million. But that said, in our discussions with the Treasury and also making sure that we're on their radar, it's our understanding that native CDFIs are that 25 million will not be a ceiling. That's we should come in well above that figure. And if you haven't had a chance to read Jody Harris's letter that she sent out. She sent out one at the end of 2020 and then one just 2 days ago. Actually, it was yesterday, that talks a little more about what they're calling the Rapid Relief Fund. And so this Rapid Relief Fund must be spent within 60 days of passing the bill. And so what the way they're interpreting it, our friends at the CDFI fund say, the legislation requires that the CDFI fund publish a funding notice for new programs within 60 days of enactment. So I guess they're looking at it a little different than I think I would, but that's fine. We'll get a little more time to work this out. But they have until February 25th to announce how these funds will be expended in a way that is of rapid relief for CDFIs. And then I think really of note to a lot of our members is the fact that only certified CDFIs will be eligible for this $1.25 billion CDFI rapid relief program. And so I think that's good news if you're a certified CDFI, and not so good news if you're not a certified CDFI. So hopefully if you are still in the process of being certified, if that happens anytime soon, you would be eligible, but it would have to happen really before the 25th of February. So hopefully for our members, you're well on track there. But if you are a certified CDFI, then the letter also broke down 4 steps that they want everybody to get move forward on. And I think these are things that if you're applying for a NACA fund or NACA award or any other CDFI forward, you're already well moving forward on this. So 1, 10-year DUNS and EIN numbers. And I think that's pretty, hopefully easy for our folks. Update our SAM and SAM.gov account, which I know they change your passwords on that every month or 2. So I think that's something that everybody's got to do. And it can take up to 2 weeks if you haven't certified that, and you'd have to get a letter certifying things, and as well as grants.gov and create your AMOS account. So those are the 4 steps that they outlined yesterday. And one other thing that we wanted to add was that in our conversations with the Treasury, just to remind them again that we want to make sure that native CDFIs are not left behind in this really ridiculously low $25 million figure is not a ceiling, but instead a very low floor. They've told us that in order to get this money out fast, it's going to go out via a formula, and they haven't released a formula yet, but it'll be a formula, and hopefully that takes less time for our members to apply. So that's the first chunk of that federal funding that will be available soon. So with that, I want to pause really quick and see if anybody has any questions on that, because there's a fair amount of writing on those slides.
Jackson, this is Helen Scalia from 4 Directions.
Hi, Helen. How are you doing?
I'm well, thank you. I have a question.
Uh-huh.
In the other pot of money, which is of the 3 billion, there. Oh, I'm hearing an echo. Is everybody else?
I'll if you just pause for a second, I'll mute everybody again.
Turn the volume down on here because I got his.
Okay, so Helen, just go ahead and unmute yourself, and then that should be good.
Is that better?
Perfect.
Yes. Thank you. So on the other pool of money of the 3 billion, there's 1.75 billion, and that's got this header of minority lending institutions. And I want, and I know that is a new term that is still being defined.
Yeah.
The fund hasn't defined it yet. And so that is for CDFIs that predominantly serve minority communities and are either MDIs or meet other standards for accountability. Do you know if native CDFIs are going to be automatically considered minority lending institutions?
Great question. And I've actually saved that. So the $1.75 billion question for next. So I got another slide.
Okay.
But yeah, we're going to get to definitely. I think that's really where we're going to be making our big push as an organization. It's good to see our policy committee folks on the call, like Dave, Castillo, and a few others. So that's really where we're going to be making our big push. And I think you're right to highlight that.
Okay, thank you. I'll wait for that part.
Okay, cool. And we also got a question from Joanna Donahoe, and Joanna wanted to know a bit more about eligible uses for the first round of funds. And I had the language up, but I didn't paste it here. But the use is fairly broad, I thought. And good question, Joanna. I can send it out afterward. But the eligible uses for this first round, the rapid relief, is nearly everything that CDFIs already do. So.
Yeah, thanks, Jackson. I have the language. I just wondered if the CDFI fund had given any additional guidance, and I know right now they're just getting the system up and running. It's just that a lot of the CARES Act funds have not been as great as they seemed that they would be in terms of, what you can use them for and the amount of time you have to use them. So
yeah,
something to monitor that we're monitoring in South Dakota. Thanks.
Yeah, that's a fair question. And then, yeah, if you look at the example of the coronavirus relief funds for the tribes, how those were administered, um, um, I think there are some lessons to be learned there. Absolutely. And then you look at the PPP, which we'll talk about briefly,
Right.
how native CDFIs were included or not included, or informed at the last second. Leaves a lot to be desired. But I do remember the language I thought was pretty broad. And I think maybe the next question is how do they want to have reporting, and make sure that that is smooth, and requires as little additional effort for native CDFIs, so our members don't have to take their eye off of what they're doing in their day-to-day work in order just to report about it. But yeah, they really haven't released much more about what they want to do with that, besides that letter that came out, or the notice that came out yesterday, saying that make sure your information online is up to date. We've asked to have a representative from the CDFI fund join one of our calls when they have more information. They've also said that they're going to have their own webinars when they release the information about how the funding will get out. So for sure, everybody would be eligible to listen to one of those when they come out, whether it's on our channel or on the CDFI fund's own channel.
Yeah, the only reason I raised it now, I figured they would eventually come out with guidance, but when the statute's really broad, that leaves a lot of discretion for the CDFI fund. And so this might be a time to weigh in with those guys, as you've been doing now, just because the other CARES Act, I mean, some of the documentation requirements just made it really difficult to actually get to the people who need it the most. And I mean, to the extent, if this is just going to be lending capital that you can use for anything, that's great. But if it's going to be lending capital that has to be used for someone who was negatively impacted by COVID, and it's too narrowly defined, then it's just going to be really burdensome. For example, like the state funds, you have to have loss of income. And I know this varies by state and their interpretation of the federal statute, but a lot of the ultimate beneficiaries in Native communities haven't had loss of income, but they've had increased expenses because they have more people at home. Also, people have had to spread out and are trying to, either purchase new homes, or housing authorities are trying to build new facilities or temporary shelters, and they haven't been able to use CARES Act money for that, which doesn't make sense because it's all related to COVID, but the definition of impact of COVID is too narrow. So that's just sharing that.
That's a good point. Yeah, that's fair. Yeah, that's a good point. Are there any thoughts, questions, concerns about what little we know right now around the rapid relief grants? All right, cool. Let's jump into another slide without any pictures here. Sorry about that, folks, but the text is what matters. So yeah, the second part of the $3 billion that's going to the CDFI fund is 1.75 to expand lending, grant making, lending, grant making, or investment activity in low and moderate income minority communities, and of which 1.2 billion will be for providing technical assistance, financial assistance, training, awards, and outreach to minority lending institutions, and of which this includes native CDFIs. So that hopefully answers your question, Helen. And then the letter that Jody Harris put out at the end of last year also says something I thought was a little concerning, which is that says the 1.2 billion for minority lending institutions, quote, which is a new term established in the legislation for those CDFIs predominantly serve minority communities and are either minority depository institutions or meet the standards for accountability to minority populations as determined by the CDFI fund. And then she noted that it's going to take the CDFI fund to some additional time to develop a program to make the funds available. So I think obviously there's good and bad there. I think native CDFIs, as they're currently defined by the CDFI fund, are eligible for that 1.2. Then the bad is what other organizations and institutions are eligible for that 1.2. One argument that we are going to make is there is also $9 billion that's available to folks that are minority depository institutions for equity infusion. And that's a huge, significant chunk that really is not available to 90% of our native CDFIs. We know that there are a few that are also not are members of our organization that are available, that can apply for that. But otherwise, we think that the 1.2 billion should be really targeted for minority CDFIs and native CDFIs in particular. And then another bad is, who knows when they're going to come out with the rules for this. Congress said that the money would be available until expended. So I'm sure that our friends at the CDFI fund are working on this first tranche, getting this first tranche of money out the door before turning their attention onto this more thorny subject. But that said, either way, we're going to be engaged on this, and we wanted to flag it for our members. And then I think finally, either way, we're really hopeful that this should be a big investment in native CDFIs, one that we've never seen before on a federal level. So I'll pause right here, see if anyone has any questions or comments or thoughts or other intel that you want to share. Okay.
At the risk of being a broken record player, I just wanted to again let folks know that those minority banks are fairly robust organizations, and I want to make sure that we represent ourselves well. Although they're allies, they're different animals, and we need to make sure we're well represented. Thanks.
Thanks. And then I see your comment about the briefing paper. This is definitely emergency level piece of work, and something that I think our policy committee's identified as number one, the top of our priorities for this coming year. Our policy committee is developing some priorities that will be public soon, but we're still working out, but this is the priority for the year. Yeah. Cool. Well, hopefully, we'll keep moving forward, and we're definitely going to have more information on that as things move on. So you're listening. So Jonelle from Idaho has got a question about listing of minority depository institutions. I'm sure there's a list. I don't have it on the top of my head, and maybe our guests might have one. But I know we have a couple on the call right now, and I'll point Joel out. Joel's from Native American Bank. He's been awesome, and they've been a great member. They're a bank CDFI, and really, I think one of the ones that leans in, and their members, Native American Bank really helped our members when it came to things like getting the PPP last go around. So
thanks, Jackson.
Yeah, good to have you.
Yeah, to answer that question real quick, the FDIC is the keeper of the definition of who qualifies as a minority depository institution, and their website has a database you can search, and you can search by like racial designation. I think there's still 19 qualified native-owned MDIs, primarily tribally owned across the country, and that would be where you go to find out who is eligible on that side.
Cool. Thanks, Joe. And okay, we'll just transition to the PPP part. And so this is something that we spent a lot of time on a few months ago, and then once again, there's money available. We sent several letters to both the SBA and Treasury asking that, one, native CDFIs be allowed to receive these forgivable loans, and then two, that native CDFIs be eligible lenders so that they could better serve their constituents if they so chose. Even though I think the majority of our members, by the time the program got moving, didn't engage or didn't at that point chose not to become lenders. That said, we followed up with this SBA before they launched the program, reminded them of our request in our letter, and the reason why native CDFIs are great lenders in their communities. And they told us to have native CDFIs apply to be lenders if you're a non-depository institution, even if you didn't meet their $50 million threshold for business. And so I know of one native CDFI that applied, and I haven't heard back if they were able to get approved. But again, the problem was we found out about this about 4 days before the program went live, and that didn't provide much time for turnaround in a COVID world. But fortunately, we do have a few of our PPP lenders that are CDFIs, are bigger ones, like Joel, and we got Andy Gordon. And I think they're providing PPP loans to their existing clients. So it's good to have them. And I know that other folks like the Community Reinvestment Fund, who did some partnership with us and some of our members to get loans out in the Great Plains area, are still interested in working with CDFIs and their members. And then one other thing I think we sent out a notice on last week was that when I was on that call with the SBA, I asked them again about making sure that CDFIs are eligible to receive loans. And I asked if a CDFI is eligible to receive what they're calling a second draw of the PPP, would it be forgivable? And this concerning response that I got was that CDFIs as lending institutions are not eligible to receive the PPP, which is disappointing, and something that I know we got lawyers that take the other side of that. So, but just wanted to flag that for folks and say that's disappointing that that's still a problem. I want to pause and see if any of our lenders, maybe Andy or Joel, have anything else to say about the PPP as PPP lenders and folks that are right there.
Hey, Jackson, it's Andy. How are you?
Doing great. Happy New Year, Andy.
Good. Same to you. And I hope everyone is healthy and doing well and taking care. Unfortunately, I got to jump off for an 11:30 meeting. I did send the link to the FDIC. Oh, someone else already did it too. So Joanna did it. So it's the link to all the MDIs. And there's a spreadsheet there about PPP. Actually, as soon as the door opened, we were like drinking out of a fire hose. And as of midday yesterday, we had to stop doing the PPPs. But, we referred to others. But, we had hundreds come in very quickly. It was hard to be prepared for. We prepared the very best we could, but we did have to stop at one point. Joel, I don't know what your experience was over there in Native American Bank.
I actually had my signal drop and just got back on, so I did not hear what you said. But I can tell you about our PPP experience so far. We did have the portal turned on earlier this week, kind of the first in line, and we have already submitted some second draw
Joel, I think we lost you, but hopefully, yeah, broadband is must be busy in Denver. So, but I think Joel, yeah, did reach out earlier, and they said they were really busy also. So, hey, Joel, I think you're back on now.
Oh, okay. I was just typing a message that apologizing for my internet. So I don't know how much if you heard I started talking, but we are very busy right now processing second draw requests from people who came to us from across any country in the first round, trying to prioritize making sure that we have the capacity to get those taken care of. So if we see that we can get those in line, we might open back up for new customers that may still need a first round. If they got left out, you can do an initial draw, or that got one from someone else and maybe their bank doesn't offer the second round and can help them as well as this goes through March. And we hope that funding lasts, in several weeks, not just a fleeting availability. So it's hectic, and there's some bumps in the road from the SBA rollout, as no one would be surprised to hear.
Yeah, cool. Well, thanks, Joel. Oh, thanks, Andy. Thanks for the update. And then, yeah, basic reminder, I think if your organization or some of your clients are thinking about taking out the PPP, they SBA is asking that the person who received the money show that they have a 25% decrease in receipts year over year. That's right, Joel?
Actually, it's more flexible than just year over year. They say that you can identify any calendar quarter in 2019 and match it with the same calendar quarter in 2020 to point to a 25% decrease in receipts. Or you could also use.
Cool. I think, and we lost you again, Joel. Yeah, I forgot. Yeah, can be quarter versus quarter, 2019 versus 2020. Cool. Awesome. Anyone else have any other thoughts on PPP or suggestions or news, insight? Cool. Okay. Let me stop sharing. And now I'm really excited about the conversation we'll have next. So our friends at the Social Venture Circle are an organization that I think our board chairman, Pete Upton, might have connected us with. And so we've invited Babbie and Pam Porter to come talk with us a bit about Social Venture Circle, what you all are doing in how you all are engaging in Indian country. You just had a pitch contest, and I know some folks on the call listened in on that. And then also you all did some work. Let me make sure you're able to share your screen. I've done some work on looking at individual investors in CDFIs. And we thought we here on the channel are looking at exploring all different options and resources for native CDFIs. And this is something that I thought might be interesting, and we could have a good discussion about it. So Pam and Babbie, can you first tell us a bit about yourselves and the Social Venture Circle?
Sure. Thank you, Jackson. And it's really an honor to be here and to learn from all the work that you're doing. Thank you all for being there for our neighbors and communities. We got to know Pete and Jackson through the Native American Showcase, and we're really pleased to have this opportunity to partner with you all. So Pam and I are both volunteers with the Social Venture Circle, which is a membership organization of impact investors. We typically lead with a racial and social justice lens in everything that we invest in. And of course, Indian country is very much in our hearts and minds. And so it became apparent when we were reaching out in March to the entrepreneurs that we believed in and supported, that the banks were failing them miserably, and you all were the heroes of of really helping these businesses make it through these times. So I put together, having no idea where we were going with this, but just really realized we wanted to showcase and highlight the work that you are doing, and was blessed to find a remarkable partner in Pam Porter, who's a member of the Philadelphia chapter. So I currently make my home on Lenape land in Brooklyn, but I am a 30-year Alaskan resident and was very excited to see Cook Inlet be recognized at one of your meetings, my friends there at Cook Inlet. So with that in mind, Pam and I have started on this venture, and she has done some remarkable work of realizing that there are opportunities for individuals to invest in the work that you do. This may be very small, but people are passionate about investing in things that make a difference and share with their friends and their foundations and their colleagues. They're on boards with the Quakers and their universities. So we're really just trying to showcase the great work that you're doing, and looking forward to collaborating and partnering. And I'll let Pam take it from here.
Hi, everybody. Many of your names are familiar to me, and maybe my name's familiar to some of you. I spent about a decade at Opportunity Finance Network. I headed the strategic consulting, and we did so many trainings and capacity building opportunities that benefited from the contributions of Native CDFI leaders and the participation. And I have attended the Native CDFI Awards ceremony for many years, and have just so enjoyed seeing the great work of Native CDFIs celebrated, and enjoyed being part of that celebration. Babbie and I are going to go back and forth. We really want this to be a conversation. We don't want to talk at you. We want to, just share some of the work we've done, and, really issue an invitation to engage with you further, to benefit from your insights and wisdom. We thought what we would do, if it's okay, is just give a short overview of what SVC is. Babbie really took the lead in starting the Main Street Investing Committee, which has just blossomed, and we want to just give you a sense of those topics and invite you to be part of it. But then one of the gaps that we identified during that work was that there was no list of loan funds that had programs that allowed individuals to invest in them. And that would be both for individuals to know, hey, here's a place that I can support through an investment, but it would also be a value for peer learning, for CDFIs that are interested to know who's doing it in their geography, and maybe reach out and learn from them. So we wanted to, you are the first group that we are sharing our findings with. We posted a draft report on CDFI Connect earlier this month, but this is the first time where we're going to be summarizing some of the key findings, and we look forward to posting it publicly by the end of this month. So Babbie, do you want to give an overview of SVC?
Sure. I think I talked a little bit about what we do. And as I said, we're a membership organization. Pam volunteers in the Philadelphia chapter, and I volunteer in the New York chapter, and I'm currently back in Colorado working with a lot of the values aligned investors here. As I said, everything that we do, we try to make sure we do with a Jedi lens, and really building out impactful opportunities for people to invest. But we're also through our community capital working group that we started. We have, if you want to go to the next one for me, thank you, is really, we decided, there's lots of inspirational stories out there, but we really want to find ways not only to educate and inspire people, but to have a place for them to write a check, honestly. As I said, they may be a $5,000 check, they may be a $100,000 check, but at the end of the day, people feel good about the things that they're investing in and the resources that they've been blessed enough to have. So the first subgroup we started was the community capital, the CDFI group, which having Pam has been a real blessing with her incredible knowledge and the survey that she's going to talk about, knowing that you may know of other resources of CDFIs that are able to accept individual donations and investments. So please help us flush out this list. And then from there, we realized, well, you know, a lot of the businesses as sole proprietors are going to really have to look at different models. So we're looking at a transforming ownership model, sort of a employee ownership. So that's been another subgroup of our working group. And now trying to flesh out a whole restorative finance case studies, because as many people know, a lot of the investments are extractive, and that's not what we want to be part of. We don't want wealthy people to get wealthier. We want to make sure that we're investing in communities and making the community better as a result, and not taking out the profits and leaving behind anything that should go right back to the community. So if you know of investment models, we are trying to gather as many successful and unsuccessful models as we can to make a very brief case studies, even short videos, so that there's a place for people to go to look at alternative models rather than just debt and equity, which can be quite tough on the entrepreneurs who are trying to do this work. And then last but not least, there's been a lot of changes in the SEC regulations, really opening up the crowdfunding opportunities. So we're looking at different ways people can invest back in their own communities, but yet not be too risky, because now that people can invest who don't have a lot of money, we also want to make sure that they aren't put in great risk. So we would love to have you join us for any and all of on this journey. It's a work in progress, and we'd love to have you. So I'm going to turn it over to Pam to talk about this incredible work she's been doing.
Okay. You know, just to sort of build on what Babbie said, we are putting together a series of webinars that go out to a list of about 1,000 individuals. And we typically have about 200 people register. So, you know, we really view this as an opportunity to get the word out about CDFIs and some of these other topics to folks who have a bias for action. We are just at the beginning of this process. So again, welcome your input and participation. We did our first webinar was in November. We focused on CDFI credit unions and banks. And building on the survey I'll tell you about in a second, we hope to do our second webinar focused on CDFI loan funds, including native CDFI loan funds by the end of this first quarter. So, you know, just to reference some of this, this work that we're talking about, I'm just going to share a new screen, and we'll send this out to you by email. This is one of the things we learned is there was no list of loan funds that took investments from individuals. And so in collaboration with OFN and many other groups, SVC, we put together a very simple list in the fourth quarter of last year and asked loan funds, do you take investments from individuals? And, you know, yes or no. And if yes, tell us about it. If no, tell us why not. And so what we're going to do today is to sort of summarize some of that information, but also, you know, we would really welcome you taking a look at this list. We've sorted it by state, you know, with the thought that individuals like to have an impact locally. And then as peers, it's nice to find someone who's serving the same geography as you. We heard from, let's see, we've got about 48 CDFIs self-reported information. And then from folks who are part of our group and from some public research, we pulled together another list of 13, of 12 or 13 organizations that take individual investments. So Again, we would love you to look at this. Let us know if there's any additions or deletions or modifications of any organizations you're familiar with. So I'll just go back to the PowerPoint if you don't mind. And so just again, to share with you sort of the overview, we did hear that there are 52 loan funds that take investments from individuals. And I've got to say, this was a much bigger number than anyone ever expected. I think most people we talked to thought it was a number that was, 15 to 20. 20 would have been the max. So I think we were thrilled to discover there were so many. Almost 60 organizations, or I guess just over 60 organizations, cover 30 states. And this is really great news, but as we all know, there are over 500 loan funds and native CDFI loan funds. So there's a lot more that could offer individual investments, but we were absolutely thrilled to find this number and to make that information visible to individuals. We asked people about the investment program, and we asked, do you take investments from all individuals or only accredited individuals? And about a third were only accredited, and in many cases they're in states that have those limitations. So that's another reason to connect with peers that are in the same states with each other to find out what some of those state regulations are. The interest rate that they reported that they pay to individuals was mostly between 1% and 2%. A few paid a little bit higher than that. The terms that people referenced were as little as a year, but most talked about 5 to 7 years. Some were 10 or more. And then the amounts vary too. Some folks said they take as little as $1,000, and others, especially those that were limited to accredited investors, had a minimum that was much higher, over $100,000 or higher. So we also asked the 60 plus yeses, why? Why do you offer an investment vehicle for individuals to put capital into your organization? And we allow people to check all that apply. And the 5 areas that folks identified you can see here, but I think it's just so interesting that almost everyone said to diversify their sources of capital. Just to create another source so they weren't solely dependent on the banks or a foundation or the federal government. It created a new source and a diversified source. Even if it wasn't a huge amount of money, it was still a diversification. And then I think the other 2, I think, were related, to engage with community members and expand ways for them to support us. And I think, some folks may have hit their limit from a donation point of view, but they might be willing to put a little bit of money to work if they got a modest interest rate for that and still supported the mission of the organization. And then you can see the last 2, but still pretty high, raising our profiles in impact investment and lowering the cost of investment. And I just wanted to tell one story. We talked with one CDFI loan fund that has had a program for many, many years. But they said, folks in the community are just so eager to put their money to work. And it's a very rural state. They're so eager to make a difference, to support good work, that since July 2020, they have raised almost $4 million in investments from individuals. And they said that the benefit is not just that money, it's that all those individuals are now going out to their networks and talking about the great work of this loan fund. And whether they are raising awareness or raising donations or raising more capital investments, is doing a great job to, really build a base of support for the work of this CDFI. So, it's just a great story, and we are eager to hear more stories like that so we can showcase them to the SVC network. So if you have any, please share. So we did still hear from about 20 organizations. We had a bias towards collecting who does, but we still asked, if you don't, tell us why not. And do you plan to offer a program in the future? So we heard from 20 loan funds, and 65 of them said maybe. And fully 25 said yes, and about 10% said no. And so we said, well, why don't you? And without a doubt, the number one reason was we don't have a model to follow. The second reason was we're concerned about the amount of staff. We're short-staffed now. The thought of starting up a new program and administering it, we can't even think about that. And then we finally asked folks, would you be interested in talking with your peers to learn more? And fully 90% of the loan funds who said no, they don't have a program, would be interested in some sort of peer learning, which is very consistent with the CDFI industry that I've gotten to know. So that's a high-level overview. Jackson, I know, was willing to send out the spreadsheet, and certainly can send out the slides if you're interested. But we're just really eager to hear any feedback you have, and share any ways in which we can support your work and continue to engage with you.
Awesome, great. Thanks, Pam and Babbie. I think, personally, I'm interested, and I think this would be something I'd like to learn more about. I know that I get approached by folks who want to invest in CDFIs, and where do we send them? And looks like we have a comment from Dave out in Arizona. Dave, you want to share what you wrote, Dave?
Oh yeah, I used to work for a large financial institution. I was on the native lending team there, and then Katrina hit, and it turned into the Native and Rural Initiative, and then the Gulf Coast Initiative grew and grew and grew, and before too long, the Native Initiatives team was disbanded. That's happened at the big banks as well, even on the commercial lending side. So I'm wondering, there are so many investor networks out there, and yet it doesn't seem that they've built a lot of capacity around Native initiatives. I wonder, do you feel, kind of from your knowledge of this network, is this kind of a point in time initiative, or do you see that there's significant commitment to, hiring Native staff, developing robust Native initiatives? Where do you see this? Where are we at in terms of investors taking an interest in Indian country? Thanks.
Yeah, I wasn't sure if Babbie was going to take that, or we'll probably both cover it. Well, I can tell you this series of conversations that's happening across a broader audience is probably a byproduct of COVID. Before, I know the work I was involved with was SVC was very chapter specific. So, but I think probably like this network and others, we're all coming together on Zoom a lot more. And so I've seen that it's really expanded the reach. And what I've experienced, again, just as a participant, is that the topic of Native communities comes up all the time. And I know, as Jackson mentioned, our first interaction in a while was with this Native entrepreneur showcase that that we jointly supported. It originally came from SBC, and Pete sort of, I think I actually shared the information about it with Pete, and because we had a connection elsewhere, and just the the resources and expertise that he brought to it, it just blew away everybody in the SVC network. And I don't think I'm on a call now where folks aren't asking about well, how does this affect Native communities? Are we talking to Native communities? Who are the CDFIs that serve Native communities? It's a question that comes up frequently. But I will say, if we don't continue to showcase the work of Native CDFIs, then, just as you said, other things will crowd it out. And so I guess part of what, part of the reason we wanted to come here and let you guys be the first to hear the results was because we hope you will partner with us in telling the story and, join us on different phone calls to showcase the great work of Native CDFIs and what Native CDFIs need to succeed from individual investors.
And thank you, Pam, and thanks for bringing this up, Dave. If you know of others that have done this work, we don't pretend to be the experts. We just want to do everything we can to highlight the conversations. And we've done several conversations through our Next Economy Live with members of your of this network, actually. So I will say that this conversation, as Pam said, is much more intertwined in every discussion that we have now, and we will make sure and do everything we can to partner with organizations to get the word out, because a lot of investors are feeling a little nervous about directly investing. They don't know where to start. You all are the experts, so the more we can highlight, if you want to make a difference, work with you all, and because you know your communities. So thanks, Dave. If Confluence or others, I know Dana really well over there. If there's other groups that you think we should be reaching out to, that's why we're here, is that collaborative effort. So thank you.
Awesome.
Hey, Jackson.
Yep.
Yeah, well, one thing that I wanted to throw in there is we're doing a leadership cohort on Saturdays that started with Professor Gans from Harvard, and it's about developing that story. And really, I think the investing that we're talking about here ties into like all aspects of investing, even when it comes to CRA investing. The people who are going to invest in Native communities have to hear the story. And really, that's what we're going down the path on Saturday, is really developing some strong stories that move people and to invest. Because the thing, I've been researching this a little bit, Babbie and Pam, since we've been talking to some local investors and things of that sort. What the biggest thing that they've told me is that it's all about, relationships and understanding. It's kind of like it'd be no different than me investing in the stock market. I'm going to do as much research as I can possibly do. And so I think the path that we're on about developing that strong story is so important.
Thank you, Pete. Yeah, we're excited about the folks who are involved in our Native CDFI leadership cohort. And yeah, this is fun stuff.
I got to tell you one other funny story. I don't mean to interrupt you there, but I was on the phone with Tawny Brunch yesterday and earlier this week, and I mentioned this to Tawny. And Tawny, just in her way, she said, "Oh yeah, we've been doing that forever." It's like, so I wanted to get Tawny on the phone call today. Sometimes it's, I think in the Indian communities or Native communities, what we do is we like to partner with people who have had their toe in the water to begin with, and kind of feel that reassurance. But it was kind of funny. She said, "Oh yeah, we've been doing that, and no big deal." So it's that'll be another one that we'll bring into the conversation, Pam and Babbie.
Mm-hmm.
And this is Helen Scalia. I just want to elaborate on mentioning about 4 Directions individual investment program. Ours is actually really grassroots and an outgrowth of an interesting faith-based initiative and partnership that we started 15 years ago. And we would love to be part of a broader conversation around bringing these kinds of investors in, because there are many, many positives to cultivating relationships both with the faith-based community has translated to relationships with individuals. And it's been an interesting metamorphosis, and we believe there's just a tremendous potential for Native CDFIs, especially with discussions around reparations. Because of these relationships, we're getting all kinds of unusual calls. This is a moment of extreme interest. I can't speak to Dave's, top level interest, but at least in the grassroots, grassroots in Northern New England, we're seeing a lot.
Thanks for sharing, Helen. I wanted to hear more about what Four Directions is doing. That's great news. Yeah, Lakota Funds has been doing this for a while, and we'll hopefully hear more from them. We've got to wrap up, but looks like Laura Bloomberg has her hands up, and then I think we'll have to shut down for the week. Laura, you have something? I don't think we can hear you, Laura. Okay. All right. Well, yeah, we've got to wrap up. I want to say thank you, Babbie. Thank you, Pam, for coming on our channel and sharing sharing the outcome and the really results of your study before it gets out to everybody. I think we're happy about that and this interest. Hopefully this is an option for some of our CDFIs to look into further. And hopefully we keep this conversation going. And we'll send out the deck and the spreadsheet to folks. And I think one of our goals is to have more Native CDFIs on that list that hopefully gets distributed wider and we get some investment there. And then finally, I wanted to end. So next Friday, we're going to be talking with the Federal Reserve. It's a formal listening session on the Community Reinvestment Act. We'll send information out later, but we have a few different comments, but some of it is around also telling our story and connecting with banks and also making sure that potential bank investors understand about CDFIs. But look for information on that, and please come with questions. I think as opposed to other rulemakings, the Federal Reserve will be able to answer questions as opposed to other things we've had in the past. So I think that'll be good. And with that, I want to say, anybody from our board want to say any final words? Pete or Cindy or Fern?
Just thank you to Babbie and Pam for giving their time today. It's crazy how being involved in so many different conversations throughout the year, how it creates networks. And to me, that's what it's all about in our industry, is creating networks and strong relationships. So I thank you.
Awesome. Thanks, everybody. Happy New Year.